From being one of the poorest economies to the second largest in the world, to now facing challenges with providing its youth better job opportunities, China is crumbling. While Goldman Sachs predicted that China would overtake the US as the largest economy in the world by 2041, that dream seems to stray away. According to the National Bureau of Statistics, China's youth unemployment rate jumped from 14.6% in January to 15.3% in February. But what's the reason behind this rise in unemployment rates, and why is this not good news for America? To find answers to these questions, we need to go back in time. In the 1950s, China was in deep trouble. It was drowned in poverty. Its life expectancy was just 36 years old. Hunger was the new normal, and it had an illiteracy rate of 80%. Now, due to World War II, the US saw a boost in its economy, creating countless jobs. The US manufacturing industries grew big time due to an unexpected rise in domestic and international demand. It was the time China realized they had to do something for themselves and compete with the US, but there was a big problem. You see, China didn't have any advanced technology, and most of its population was starving and illiterate. But they quickly knew they had one asset the others didn't, and this asset would be the one to take them out of poverty. In economics, this can be explained by the law of supply and demand, which is that if there's a rise in the supply of a product without a matching increase in demand, the price of that product decreases. This principle also applies to people. China, with its massive population, offered a vast labor force, allowing businesses to hire workers at low wages, produce goods inexpensively, and sell them at low prices. As a result, the global market embraced Chinese products eagerly, leading to a boost in China's economy, which came to dominate nearly 15% of global trade. However, as the saying goes, what goes up must come down. The very thing that led them to the top is bringing them back down, especially the younger generation. The youth unemployment rate got so bad in the country that the National Bureau of Statistics suspended the release of the jobless rate among 16 to 24-year-olds from June 2023 until January 2024. Although China's economy seemed to recover after multiple years of downfall due to COVID restrictions, the rise of youth unemployment affects this recovery massively. There are three major reasons for this. Firstly, the private sector. Companies like Tencent, Alibaba, and Huawei offer 50% of the country's tax returns, 60% of economic output, and 80% of urban employment. However, the issue lies in the fact that the government doesn't favor these private companies much. It's important to note that the Chinese Communist Party, which governs the country, is still communist, and no one is above the party. But Jack Ma, the co-founder of Alibaba, forgot this. You see, in 2020, Jack Ma stepped onto a stage in Shanghai and threw shots at the government. Shortly after this, he went missing. His company's IPO was blocked by regulators, his company got fined billions of dollars, and in just 3 years, his network saw a huge fall, going from $61.7 billion in 2020 to just $25 billion in 2023. This caused many private businesses to be cautious, and when businesses run cautiously, there are consequences. Due to the government's actions, Alibaba fired more than 10,000 employees, Tencent fired 12,000, and Country Gardens said its goodbyes to more than 30,000 employees and more. Due to this, not only does the current workforce feel affected, but graduates are also finding it extremely difficult to find new, better paying jobs. In 2024, the government still implements new regulations, aiming to control and maintain authority over private companies. However, doing this only limits the room for growth. This brings us to the second reason, the decline in foreign investment. You see, the Chinese government also relies heavily on foreign investment. For many years, companies like Apple, Nike, and Goldman Sachs have heavily invested billions and billions of dollars in not just technology, but also intellectual property and talent, keeping the Chinese economy on its feet. However, Due to questionable government policies, foreign investors are driving away. Companies like Apple have already shifted 9 out of 11 manufacturing operations from China to India, while others, like Jeep, have closed factories in China. Major investment firms, such as Cyan Asset Management, have significantly reduced their annual investments in China. In fact, from 2016 to 2022, capital investments went from $46 billion to less than $5 billion. These relocations and closures will lead other industries out of the country too. You see, when a company downsizes and foreign investors move out, it causes a huge downfall in job opportunities, leading to high unemployment rates. This ultimately leads to the final reason: lower paying jobs. Over time, people in any developing country tend to experience improvements in their lives. They become better educated, skilled, and wealthier, leading to an overall desire for higher standards of living. It's the same for China, but the problem is, there is a mismatch between the number of educated youths and the number of high-paid job opportunities. According to the official data, the number of young workers with a college education has gone up from 0.9 million to a whopping 7.5 million workers. However, the job opportunities available to them are low-skilled manufacturing and machinery factory operations. Another problem is that these jobs also require some level of skills that are completely different from those taught in college. Again, due to the government's back and forth regulations, the technology sector, which typically employs a huge chunk of young workers, has reduced their job opportunities due to crackdowns, with thousands of people fighting for one available seat. In China, educated workers are facing setbacks in the job market, leading young people to resist. They're labeled as NEET, meaning not in education, employment, or training. Basically, it's a movement where the younger generation voluntarily opts out of the intense competition in education and careers because they see little reward. I mean, why would you spend countless hours trying to study, leaving your social life aside, grinding day in and day out, only to work an underpaid low-skilled job? Coming back to the actual conversation, how is this bad news for the United States? When a country faces high unemployment, its economy takes a hit. This means prices of goods and services decrease, simply referred to as deflation. Unemployed people tend to buy less, which reduces demand for those items, causing their prices to drop further over time. While cheaper prices might seem good, it sets off a dangerous cycle. Studies show that if this deflation goes on without improvements, it could force consumers and companies to use their savings, eventually failing to pay off their debts, leading to default. This deflation is a problem for the US, as China stands as one of its largest export markets. Chinese purchases of American goods and services support over 1 million jobs in the United States. US companies earn hundreds of billions of dollars from Chinese consumers. For instance, in 2023, 20% of Apple sales came from China. Not only Apple, but companies like Qualcomm and Monolithic Power make over 50% of their revenue from China. In addition to the US, China is intermixed into the global economy and consumes about half of the world's basic materials and a quarter of total oil imports. China stands as the world's second largest consumer market. Many countries, particularly those in Asia, rely heavily on China as their primary export market. If China doesn't do something about its youth and its future now, it will crumble, affecting several other countries, including the United States.